Most of us were taught that a savings account is the safest place for our money. But in today's economy, safe can actually be dangerous. If your money isn't growing at least as fast as the cost of living, you're technically losing wealth every single day. When you open your banking app and see that 0.01% interest rate, what does it actually mean for your future? For many, it's a number that feels safe, but it's actually the anchor holding back your financial progress. It means the bank is using your capital to make significant returns, investing in real estate, corporate loans, and markets, while paying you almost nothing for the privilege of holding it. They are profiting from your lack of awareness. While your money sits still, the cost of living keeps rising. This is the invisible tax of inflation. Over decades, inflation can erode the purchasing power of your hard-earned savings, turning a comfortable nest egg into a fraction of its original value. If your interest rate is lower than the rate of inflation, which is almost always the case with standard savings, your savings are actually losing value every single day. You're working for your money, but your money isn't working for you. Let's do the math. To understand how long it takes to actually grow wealth, we use a simple tool that every investor knows, the Rule of 72. It's a mathematical shortcut to estimate the doubling time of an investment. It's a simple formula. Take 72 and divide it by your annual interest rate. The result is the number of years it takes for your money to double. It's a reality check that reveals the true power or weakness of your interest rate. At a standard 0.01% interest rate, 72 divided by 0.01 equals 7,200. It would take 7,200 years for your money to double. That isn't growth, it's total stagnation on a timeline that no human can benefit from. When you're planning for a family, for a home, or for retirement, 7,200 years isn't a timeline that works for you. You need growth that happens within your lifetime, so you can provide the security and opportunities your family deserves. This is where high-yield savings accounts, or HYSAs, come into play. These accounts often offer rates 10, 20, or even 50 times higher than traditional banks, all while keeping your money just as accessible and FDIC insured. Look at the difference. At 4%, your money doubles in 18 years. That's a time frame where you can actually see the impact on your life goals. A college fund for your kids, or a down payment on a house within a reasonable horizon. Move that up to 7%, and the timeline shifts to just 10 years. This is the math of wealth in action. By simply changing where your money lives, you've cut the time to reach your financial milestones by decades or even centuries. Wealth isn't just about how much you make. It's about how hard your money is working for you while you sleep. Every percentage point matters. It's the difference between your money being a stagnant pool or a growing orchard. Every dollar sitting in a low-interest account represents an opportunity cost. It's money that could be building your future, but instead, it's just losing ground. Recognizing this cost is the first step toward a true investor mindset. The difference between these rates isn't just numbers on a screen. It's the difference in the life you can provide. It's the ability to say yes to experiences, education, and security for the people you love most. And it gets even better when you consider compounding. Compounding is the process where your interest starts earning interest of its own. It's often called the eighth wonder of the world, and for good reason. It turns linear growth into exponential wealth. Over 20 or 30 years, the gap between a standard account and a high-yield one becomes a chasm. The early years might feel slow, but the later years see your wealth explode as the compounding effect takes full control. The first step is simply being aware. Look at your statements today. Know your APY. Don't let your money sit idle out of habit. Many people stay with their big banks simply because it's what they've always done, but it's costing them a fortune. Taking action today, even just moving your emergency fund to a high-yield account, sets a new trajectory for your wealth. It's a simple move that requires almost no effort but yields massive results over the long term. Financial literacy is the greatest gift you can give your future self. It starts with understanding the tools available to you and having the confidence to use them. Your future is built on the decisions you make today. Remember, if you aren't beating inflation, you aren't saving, you're slowly losing your financial power. Don't settle for the 0.01 trap. Demand more from your money, and it will give you more in return. Wealth Insight, your guide to the math of wealth. Thanks for taking this deep dive with us today. Start growing your legacy now.